Hello there, welcome back to the Everyday Growth Advisors weekly webinar series. Thank you for tuning in this week. We have a very beautiful week ahead, so this is for everybody on the YouTube channel and the Discord community. We do these weekly commentaries where we break down the market for you. It's kind of like a quick little snapshot of what to expect for the week, and we hope that you like these little webinars we put together. Also, remember that we have the beginners course that is now live for signups. If you want to sign up for our beginners mentorship course, which kind of goes through the fundamentals of trading, please head over to learncompoundgrow.com and click on the courses for the beginners, where you can find our entire breakdown of the entire course. We have about 15 days left for registrations to close, and also at the end of this page you will find a secular trends report that you can download and read about what we think is the key secular trends into these coming years. So we hope that you like that one. Also remember, if you want to be a part of the EGA tribe, the community that we are, you can also join the EGA Discord by clicking on this tab right here. Just want to put it out there real quick for the people who don't know about us yet. Welcome in. So this week, the focus is mainly on how we have the balance between fiscal and monetary stimulus that have been occurring for a while. We've been talking about these events for almost, I want to say, multiple weeks now, and we are at a point now where we had a little bit of a correction, right? So great little moment for those of you who have been listening to the webinar and also following along with the live stream for the weeks that we have had. Right somewhere around here at the top, we started to take on hedges and take bearish positions to the downside, hoping for and anticipating rather for this to be overextension here in the market. And rightfully so. Today we are seeing a little bit of a bearish corrective wave. I'm just reminding you guys, this is not a crash. This is not a moment where you need to panic. This is a normal corrective wave on the uptrend. Okay, as you can see, we've been following a very nice uptrend, and I drew this in the last time that we were here talking and discussing about this. So this webinar is actually going to be a very, or actually mostly a technical webinar where we're going to cover some technical things that I'm looking at. Okay, so SPY's pullback. Remember, we had our first line of defense here at the 388.0 level, and we actually broke that defense just a couple hours back. We're looking at the 4-hour chart here, and now the next level here will be the 3850, which is also going to be a next dual zone here, which we will see whether we can break this zone. If we do break that zone, we're going down to 38s. So these will be the key levels to watch this week as we are embarking on this journey. Other things that we need to keep a look on is fiscal and monetary policy, which we are kind of keeping a very, very close watch on. Now, of course, we're seeing rising inflation expectations, but are we actually going to have the inflation that we are looking at? It seems unlikely at the moment, just based on inflation data for the past a week or so that we got. We don't see any obvious signs of insane inflation data, which is a good thing, and I think that's good news for the markets that are possibly thinking, asset prices are way too high. So we're not actually seeing that yet. As I was mentioning in the previous webinar, equity risk premiums are supporting these higher valuations as we are right now. But however, it doesn't mean that we can't get a pullback. A pullback is different from a crash. A pullback is needed to maintain the order of valuations, right? And so these are nominal pullbacks that you get from time to time. Think of it like the market's like a rubber band, right? This is your rubber band being stretched, and then once in a while it comes snapping back to the center line, right? And so this is all we're doing right now. We're snapping back to the center line, reorganizing, recalibrating, and now we are more than likely to see a sector rotation into cyclicals and whatnot. Now, I've been talking about it for the past few webinars. We really like financials. We really like certain tech that are undervalued. We really like healthcare, right? We really like healthcare. We really like energy at this point. These are the ones, consumer defensive stocks as well, right? Your Coca-Cola, your Walmart, your Costco, Target, all of these are pretty decent stocks to own right now. as we pivot into this structure. And if you remember back in January, start of this year, one of the first webinars we ever did, I mentioned that the overarching theme of this year the market theme, which will cause the market to throw a fit, will be based upon how quickly we can roll out vaccines. That's going to be the main market narrative that controls the market. Any kind of news that is about vaccines slowing down, vaccines not hitting a target, vaccines not being in a certain way, is going to cause the market to spook. Okay, and that's what's going to cause a deeper sell-off. So I've been talking to the team about this for the past week, and another thing that you guys need to realize is the news cycles have been fairly bullish, right? We've seen fairly bullish news cycles for, I want to say, past 3 to 4 weeks. Market was in a pretty nice run to the upside. I hope that some of you guys caught that. There were a lot of companies that were running up on that wave, and a lot of money to be made. Meanwhile, the 10K portfolio is now up about 30% year to date, so it's doing pretty good for a month and a half returns. This is the last week of the month, and we hope that the 10K portfolio will cross or stay at the 30% mark. More than likely, with this market downturn, though, we may see the 10K portfolio dip a little below the 30% return, just how market positioning is. But we don't mind that, because we know the long-term approach is still going to be a great about 40% return over 2 months. So that's the trajectory for the 10K portfolio right now. I think we will be at a 40% return by mid of March. Which should be nice. Specifically, the 19th of March is where I'm looking at, because that's when majority of my sold puts expire, and if I collect full premium on them, that's when they expire worthless, giving me a really nice bump in the portfolio. I will be focusing these coming weeks, and I will be reiterating this on next week's webinar on the 1st of March, which will be our first monthly webinar next month. So make sure you tune into that. I will be reiterating what my strategy will be for the month of March. I've briefly mentioned what the strategy is to my team, and they are all in sync with me at this point. So these are the few things that we're looking at. Inflation, which may or may not be on the rise. I don't think it is just as of yet. There are expectations, though. And so this is in line with our theme of the week, which is the new nominal. Okay, the new nominal theme, which focuses on the new era of acceptability when the COVID crisis is here. Okay, and the COVID crisis is going to see stronger growth in across the sectors, but lower real yields as the restart accelerates, and central banks, they limit the rise of nominal yields because they want to keep interest rates low, right? And so even as inflation goes higher, I think there will be more incentive to get into risk assets, especially on this dip. I think it's a great time to be buying risk assets. I really like playing emerging markets as well over here. JPEM is a great one to play if you wanted to buy into emerging markets. KWeb, which is the Chinese internet ETF, pulled back a little bit. I want this to come a little bit further down, and maybe at around 94, 95. That's where I would like to get in on KWeb. As this continues to run to the upside, perhaps if I can get it even cheaper would be nice. But let's see what happens there. Volatility is pretty low, so we will definitely see more of a muted approach here. So that's mostly all that I have for you guys this week. I'll be putting out the weekly report onto the Discord community, so you guys can have a better understanding of what I'm looking at for this week, what are the sector rotations, what I'm watching. Remember, we put out these weekly reports for everyone in our Discord community on a weekly basis. Just for an example, like last week, this was the report that we put out, talking about how we recap and then kind of give you guys a little bit about the key market rotations and developments, notable news and catalysts that we're watching for. So everything kind of fit into a nice little place for you to review. So I hope you guys have a great week. I'm going to keep this webinar really short here. And just be safe out there. I know for those of you that are in parts of America that are, blizzarding, please be safe and stay warm. On this dip over here, of course, if we see a nice little reversal, I will be looking to get some long positions after I close out my hedges. So that's what I'll be intending to do today and sometime this week, but we'll see how far down we actually get for me to actually do that. So that will be the main focus for this coming week. All right. So take care, have a great weekend, and I'll see you next week on this webinar.